So majority of you guys are saying, wait for the break and sell below. No, that's the wrong answer. This right here is a hope. Okay. This area below support is hope. It's basically saying, if that happens, I'm happy. That's like predicting the future kind of thing. But the better thing to do is, if it can get up closer to the top again, I'd love to sell that today. Does that make sense? Right? So there is going to be a time in the day, if Australian dollar is weak, it doesn't mean it's going to be going down for like 5 years. It means it's just weak for today. It's going to have some retracements in it. It's not just going to be red bars like, it's not just going to have like massive red bars all over your screen. But it has to do some sort of retrace. Maybe it'll get up to here, come near the top and then come down, and it may collapse. It may, but do we care if it collapses or not? We know some buyers here might give me trouble. Why not just take the profit right there? So anyone thinking at this point, I'm going to buy it because I understood the state of the market, I'm going to buy it. Okay, you can. But for me, it's like, I'm with the big boys. Let all the buyers do their last attempt, and then we'll hit it. Okay? So it is a decision you have to make at that point, is who do I want to be with? What direction do I want to be with? And why? So technical is one part, right? We figured out the technicals after we did the fundamentals, which is where's the money? Then we came to the technical, which way? What's it doing now? And then because of the fundamentals, we now then know we're preparing for today to happen like this. Right? And then we start preparing for that accordingly. Then okay, I know how my day looks like today. Well, it needs time to get up there, right? At least 2 candles. 2 candles means 8 hours. I'm free for 8 hours. No headache, no problem, nothing. I can relax. But if I'm here, keep fingering the trade, okay, come on, let me buy it on the way up, then let me sell it on the way down, and let me make all the money in between also, then you've never made a profit in life, because you're too anxious to make a profit for the first time. You need to slow it down. Okay, I'm going to start repeating this in all my webinars. Slow it down. Leave the passion at the desk. I know you want to make money, but you will. But the money in this market, unfortunately, comes with patience. This is the one industry where if you're really okay, so there's some questions here. If there's a heavy impact event or many news for the same currency, sir, do you prefer to trade for that currency pair? Yeah, sure, why not? But there's a news event. Maybe I let the news play out. Here's an example. Let's say I'm looking that, okay, Aussie is weak for today, right? I know technically it's in a range. My game plan is to sell it. But the market right now is down here. And I'm like, oh, there's a news coming up. What are the only 2 options the news can do? Tell me, everybody, what are the 2 things the news can do? Up or down? If it goes up, do we not feel happy that it's coming up higher to where we want it to go? Maybe from up there. If it goes down, do we not treat it like, oh, maybe it's a breakout? I'll catch it on the underside then. Why trade the news when the news can be your decision maker? Let the news do it, and then you're like, oh, thank you very much. Let's take all that money now. Make sense? So slow it down, calm it down. Just because a candle moves quickly doesn't mean, get all the money out of the bank. We got to get into this trade. Slow it down. Okay, so Routine, checkup, step number one. What's step number one? Red reports, good. Activity in the market, good. Step number two. Yes, and coffee. Coffee is good. The flow, the direction, yeah. All right, step number three. Yeah, timing, game plan. What am I going to do? From where? So if you then in step two you figured out was the range, and then you also figured out in earlier in step two that Aussie is weak, then now you're like, let me cross-reference that with the red reports. There is nothing Aussie today. Okay, then I just needed to come up away from the bottom so I can attempt to sell. Okay, because I'm not going to sell in the face of the buyers. There's no way. That's just answer that question for me. You guys just said buy from the bottoms, sell from the tops. So I'm trying to listen to you guys. Okay, I will not sell it at the bottom. Okay, so then you have a game plan. Now, what do you do with the game plan? If we know that we're supposed to sell from up here, do we get in and just buy it? Do we buy it on the way up? No, we can't, because that is a gamble. We want to be on the side that has a higher probability of winning always. Okay, so if there is a news, the news might play out and it might help you, whether it goes higher or it goes lower, and so on and so forth. Okay, then step number 4. Once that happens, I go into I can show you one of the pages I use. Again, I don't know if it's going to load because of my VPN here. Let's try it. It's a position size calculator. I go in and there we go. So it's as simple as here, position size calculator here. I don't endorse this website or anything. I just found it. If you guys find a better one, tell me, of course. It's asking you, how do you calculate your pips risk? I put in my pip amount. I put in how much is my stop loss. Let's say my stop loss is 30 pips, because I figured out that, okay, I'm going to be selling soon on my Aussie yen, and I have a 30 pip stop loss from what I see. Okay, currency is in the US dollar. And how much risk am I doing? Now this, many people will say, 1%, 2%, this and that. Fair enough. That sounds all nice and beautiful. But in a book, if you got a $500 account and you want to trade 1% or 2%, then Jesus, man, it's don't trade, go get a job. You'll make more money faster there. So I do with what I call by fixed money risk. Okay, I don't recommend it. This is my personal opinion. Okay, I do fixed money risk. Okay, whatever the amount is, I take a really small amount and I'm like, okay, I want to risk at all times no more than $2,000, for example. Okay, and then I choose the currency pair and I calculate the position size. So then it tells me how many units I need to trade or how many lots. And then if I have a loss, then I lose only $2,000. And then the next trade, $2,000. Next trade, $2,000. But if I win, then it's a risk to reward game. Is how much are you risking to make how much? Right? So if on this Aussie yen, you got a price up here. If you got a price up here, and where is your target from here? Where are you headed? Where's your target if you enter here? Down where? To the bottom of the range. And why the bottom of the range? Okay, because there's buyers there. So now imagine this. The market goes up here. You find a nice spot and you're like, I'm going to sell it. My target is here.